Good morning. Today is Monday. It is April the 1st, and this is the futures in 5. Take a look at where we are. Now, I talked about this area. This was the elevator shaft, and this is the escalator event. We are quite likely to eventually test these regions as it sits right now. But, as I've said, many times, any kind of range expansion here is not going to result in a hold of these levels. So as we're moving up into this space, and let me remove that for right now. Let's just take a look at what's happening. We are stair-stepping up and over resistance zones. So what do we need to do? We need to see that this area for the week looks like 28.31, 28.35. That's going to be heavy congestion zone. We actually just came out retail sales a little light, but you can see from several days past, that is the area at resistance up around the 28.62 region. We also gapped up into this motion, and so we're running counter to momentum that identified a support zone way down here. So what does that mean? Well, two things. One, in general, we are moving upward, and the easiest way to do that, folks, is to just draw a trend line, right? You know we're moving upward. We are looking at a punch up to recover and build in the auction profile associated with this technically. And we also have this sense that, hey, everything's going to be okay. We've got the government doing its thing to keep things running. And, everybody's starting to upgrade. Blah, blah, blah. Let's just follow where it is that this is going. So absolutely nothing wrong with that intraday. Buying at the top, still a very bad idea. It's going to expand your risk, and you'll end up being relatively flat or just a little bit to the upside with a tremendous amount of downside action still sitting as potential support. So what do you do here? If you're trading intraday, you're going to wait for pullbacks. This 45 area, if you take a look at this motion and this wick right up here, we've got 49. If you look at the the high of last week, it's somewhere around 41 or so. And what we want to take care of is say, hey, is it possible that we fill the gap? Could we potentially see momentum that gives us a drift? Listen, this is technically divergent. There's no way this is going to hold. Even if it expands dramatically, the technical divergence says there's not enough participants on the upside to keep it staying up there. It doesn't mean that it won't go much higher, all the way up to here, but what it does mean is that when it gets there, it could savagely reverse or pull all the way back down and come into support before rising again. Take a look at these last highs. We had this new high, collapsed, gave you a brand new high. If you said, hey, I'm going to hold on, you'd need to have, what is that? A 100-point stop? Good luck with a 400-tick stop, right? Your pockets have got to be very deep to manage that from a swing perspective. Again, new high here, same sort of thing. All I'm saying is, yes, it's bullish. It is. Watch for the pullback before you engage and look for weekly highs, daily lows, those sorts of things to position yourself. NQ, no different. Technical divergence, though not as extreme as the ES, so there is room for this one to run. It's gapped up above this number right here, the 74.14, and this area around 74.50 is going to look, 74.48 is going to look like a primary support zone in general. Last couple of days, diminishing volume on the upside. This kind of formation says, listen, I've identified support, but if I don't have any positive momentum associated with a ride to the upside like this, I am not going to hold these levels. I'm not. They're going to pop up and then fade. So that's what we are looking for there. The numbers that we see are right here up at the high, and then look for this area for a first pass bounce. If it bounces but it can't get up over your high, that's the warning zone. If it holds up over there, you're going to continue to the north. If it doesn't, we're going to fill the gap first, and then we're likely to slip back into the lower highs, the higher lows, and try it again. We're still very bullish, and this chart is generally linear. I mean, I could pretty much draw a straight line here and watch that. Okay, this one, the YM, has had really the most room for improvement. It's doing very, very nicely, right? So it's holding these edges. Take a look at relative resistance. This chart, really, for this contract, you'll have to look at a continuous contract. I keep forgetting to do that. This contract puts tests and very thin volume all the way up into this area. You can see thin pockets of volume here. This is frontline resistance. Any bounces going to give us a push into resistance that fails. We've got negative drift. Take a look. Here's a high. Here's a retest of that high with negative rotation. This is a support event. It bounced and gave us another support event. This is pushing back to the upside. So we could have range expansion, but that range expansion is also likely to fade. This one is, well, it's right there at the edge of frontline resistance. But notice, this really is probably where it's going. Everybody's talking about being long energy. In my mind, I can't quite put my finger on why it is that this feels discordant to me, but what I can tell you is this. Traders are bullish, hedge funds are bullish, pullbacks are bullish. Every single pullback we've seen has been fairly bullish. We have divergence again. This is drifting down while this is moving up. So that tells me any big expansions I could get with noise from OPEC or any kind of disruption in production anywhere across the globe, the hedge funds are going to use it to drive it up into these areas near old resistance back here. And that is my supposition. So pullbacks, this is definitely a sell zone at the first pass, but it's very, very likely to hold the 60-20 area, 60.06, if it gives you that much deep of motion. And then we'll be in better shape to see the bounce. 60 is a nice round number. Take a look at what happened to this on Friday and over the weekend. Beautiful dip into support. What do we know about this? I know I sound like a broken record, but I'm saying it again because the same thing happens over and over. And if we step back, we can use these formations to literally look at any chart we want to and figure out what the motion is. So what are we looking at? Support, support, support. And so what we're doing is bouncing off of this edge. Here is our lower high. It is 1305 or so, right? Just below 1305. And then we've got this tremendously heavy congestion right around 1300, whole number. So now we've got a little bit of a do or die here. And so that do or die says, okay, what are we looking at? Either I get up and over this, or I slip. And if I slip, I'm back down to here. That is really quite likely. Not to move in one fell swoop, but if I lose that support zone, that's going to be trouble. A lot of things are on a bounce right now, so watch your markets. Realize that we have this bullish undercurrent. People are, I would say they're nervously bullish, but maybe they're not. I'm nervously bullish. How about if I say that? And then what we want to do is watch for these things to begin to congest. A lot of people looking at upshot, but the undercurrents are much more tenuous. I'll put it that way. Hey, good luck trading.